Asian stocks rose today as the dramatic U-turn in British fiscal policy brightened investors' sentiments, while sterling flirted with 2 weeks high on hopes of the Bank of England may further delay plans for quantitative tightening. MSCI's broadest index of Asian Pacific shares outside Japan was up 1.55%. Japan's Nikkei rose 1.59%. European stock futures indicated stocks were set to continue their rise, with the Eurostoxx 50 futures up 1.25%. German DAX futures is up 1.22%. As FTSE futures up 0.87%. U.S. futures also pointed to a higher opening, with the S&P 500 futures up 1.6%. The Nasdaq futures 1.8%. Oil output at the giant Exxon-led Sakhalin-1 Russian Pacific project has collapsed following the U.S. major refusal to accept local insurance for tankers after Western insurers pulled out due to sanctions. According to industry sources, Western insurance withdrew cover from tankers operated by state-run Sovcomflot, Russia's biggest shipping group, which was sanctioned following Moscow's invasion of Ukraine. Sovcomflot and Exxon did not immediately respond to the request for comments. The developments have unfolded as the European Union is due to impose a ban in Russian oil tanker insurance and shows the major impact ship insurance and reinsurance guarantees can have on operations. In Japan, Finance Minister Mr. Sunji Suzuki is warning just a moment ago that Japan would take appropriate and decisive actions against excessive speculators-driven currency moves, keeping alive the possibility of more market interventions after the yen hits a new 32-year low. Mr. Suzuki also reiterated that authorities could intervene without any announcement, but did not comment on whether they had actually done so when pressed on speculations that Japan may be supporting the yen without publicly acknowledging it. Speaking to reporters earlier today, Mr. Suzuki declined to comment whether authorities were conducting stealth investigations or interventions to support the weakened yen. This yen slipped to a 149.10 to a dollar before the start of Asian trade on Tuesday, its weakest since August 1990, putting major psychological barriers of 150 in focus. Now, oil prices on international market edged lower today on fears of an economic slowdown and lower fuel demand from China as it persists with its stringent zero-COVID policy. U.S. West Texas Intermediate crude recorded a downward price review of 0.21% to sell at $85.28 per barrel. Brent crude futures also experienced a price decline of 0.12%, selling at $91.51 per barrel. Bonny Light selling for $92.56 per barrel with a downward price margin of 1.36%, while the OPEC basket crude oil dealers offer $94.17 per barrel with a price surge of 0.54%.